Good afternoon. I'm Brent Wilsey with Mays Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. Today we're talking about, is it time to invest in gold? A lot of people want to invest in gold. They say, oh, it's a great piece of metal. They're going to do this, inflation hedge. So we thought we'd look at some numbers to help you understand more about gold. First of all, the 30-year return on gold is 335%. Sounds pretty good, but compare that to the Dow Jones, up 1,255%. Not so good when you compare it to something else. I also want to tell you about the history of gold a little bit. From 1934 to 1971, Gold Reserve Act had gold trading at $35 per ounce. It was President Nixon who released that and let it trade at the current market price, whatever the market would bear, back in 1971.
Now, some things to think about if you want to actually buy the physical asset of gold, maybe gold coins. It is a very expensive transaction to actually occur. When you have to buy and sell gold, there's a spread that occurs. And what this means is when you go out and buy it, you oftentimes buy it at a premium, and then when you sell it, you're selling it at a discount. Those are not good things when you're an investor. For an active gold trader, that spread can be about 2%. However, for the average person, it can be as high as 16%, which really can eat into profits. Also does not account for the hefty cost to actually store that gold. So it's really a costly asset to carry. Also, this is the bottom line. If you are thinking about buying gold, even the ETF, how do you value gold? They don't have earnings, they don't have sales, they don't have a book value. It's just a tough thing to value. It's just really what the next person is willing to pay for a piece of metal.
Right, exactly, just a piece of metal. So, but with that said, we thought we'd look at a mining company that actually does mining of gold. The company is Coeur Mining, symbol CDE. I want to point out, well, let me show you the numbers here. Current price $15.64, the high for the last year $15.74, the low $1.62. But go back here to the 90s. This company was trading over $200 a share. Why? Hype on the company. We talk about this all the time. Be careful of this hype. Look what happened. I mean, even here, this looks pretty bad. It was above, what, 60, 70. Now, $15.64. So be careful with this company. But let's look at the numbers. Maybe now's a buy. We do see that the sales are up 4.2% year over year. Earnings up 80.1%. So pretty good start. However, the last 12 months, PE ratio not material. No earnings there. The earnings per share for 2014 were a negative $11.28. Not much better than 2015. A negative $2.83.
Yeah, and then looking at the balance sheet, current ratio 2.29, that's good. However, debt to equity 103%, kind of uncomfortable level where we like to see debt to equity. Also taking a look at long-term debt to equity, 81%. Now what this spread tells me is that there's a lot of short-term debt on the balance sheet. Some things to think about: if they pay off that short-term debt, that reduces their liquidity in cash and short-term investments, or they may have to take on additional debt to fund that short-term debt. So kind of some things to think about over the next year. Going out to get our target sell price for December 2017, estimated earnings per share on a GAAP basis, 57 cents. Now I will say there was a very large spread between the high analyst estimate and the low analyst estimate, but this average gives a target sell price of $9.41, telling me, hey, maybe it was time to be buying. This company was $1.25. Not now that it's $15 and change.
And I don't think it's going to go back to 200 anytime soon. So,
yeah.
All right. Well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like to receive the 5 big mistakes investors make,
give us a call at the office. Our phone number is 858-546-4306. And if you've missed any previous Smart Investing Daily briefings, go to our website, smartinvesting2000.com.